Welcome to Hassle-Free RE, the show where we share tips, tricks, and stories from the short-term rental industry and business alike. Hosted by Dave Minapace and Will Van Wickler. They'll help you navigate the exciting and ever-evolving world of short-term rentals. Whether you're a seasoned host or just starting out, they've got something just for you. In each episode, they'll bring you insider insights, expert advice, and real-life stories from hosts and industry professionals who have been through it all. They'll cover everything from maximizing your rental income and profits to creating unforgettable guest experiences and handling unexpected day-to-day challenges with ease. Are you ready to discover the secrets to running a successful short-term rental business without the hassle? Then let's get started. This is Hassle-Free RE.
Hello, hello, hello. Welcome to another episode of Hassle-Free RE. I'm Dave Minapace, president of the 5-Star Co-host, as well as Launchpad Consulting, here with New England's #1 short-term rental real estate agent, but kind of #1 real estate agent all around. This dude is speaking at the Keller Williams Family Reunion Conference in February. He's been crushing it. Mr. Will Van Wickler, how's it going, buddy?
I'm doing great, man. I love the intro. Thank you so much. How are you?
I'm good. I'm good. Calling in from a different location today.
New background. Yeah.
New background. We are finally all moved into the new house and just started a full gut renovation on the old house. So I've been having fun. It's been really fun. None of it is predictable, but it's been really fun. First we renovated this home, worked with just some awesome contractors. Everything got done on time, believe it or not. The only wild card was the appliances, and that's just out of my control.
It's like investing. A lot of it is, right?
Yeah. And we're turning around and just started all the renovations on the old house, which I intend to sell in the spring, and pretty excited about that. So it's been fun using some different muscles in the real estate space that I haven't gotten to use in a few years because we haven't done a lot of flipping in a while. So
That is fun. Kind of gets you back to your roots of the BRRRR strategy and all that.
Yeah, and it's all local to me. This house was 8 minutes from my old house, and my old house is 8 minutes from this house. So it's like going back and forth between the two is super easy. It improves the town, and it's going to make a really nice home for a new family. So yeah, we're psyched.
That's exciting, man.
It is. So let's hit on our topic for today, right? We
Let's do it.
want to do a recap of 2024 in a lot of different facets of real estate. As we start to look forward to 2025. So with that, why don't you lead us off? I'd love to hear, what was your perspective from January of 2024 now through December of 2024? How are things in the buying and selling space of real estate?
Yeah. So I'll start this off by this is the most challenging real estate market anybody has ever seen. It's the lowest transaction volume, I believe, or maybe unit count. I'll have to get that stat. In the last 40 years is what I heard, and I believe it. We
Yeah.
had an election to deal with. We have super high inflation, just a
Yeah.
very, very challenging economic climate. And going into it, I wasn't sure how the year was going to shake out. We did great this year, but it wasn't without its challenges. And I'd say a lot of things have changed in the market. And the first thing I want to hit on is the motivation and buyer profile, right? So for
Talk to me.
somebody to buy in this market that we just went through, you had to be ready, willing, and able, and extremely motivated. So whether it was driven by tax savings, which we did see, or a different buyer profile, right? So something we were talking about that we both
Yeah.
experienced is, it's not just strictly investors anymore. We saw a pretty good mix of people that just saved up a lot of capital that wanted to rent the home to offset their expense, but weren't going all in on amenities. They weren't necessarily only concerned about cash flow. They also wanted the tax savings and to use the house. So we saw a very healthy mix of that kind of buyer. And then I'd
Yeah.
also say this year was the year of the seller credit, right?
Yeah.
We saw more seller credits than anytime else. I
Yeah.
think every single transaction I had some sort of seller credit just to offset the higher interest rates, the higher cash to close, and the higher investment people are making in these houses. And I'll kind of press pause on that, but those are really the two big things we saw this year was large seller credits and buyer profile changes.
Yeah. Yeah. Now tell me this. Have you seen in the markets you serve, have you seen what have you seen for home appreciation and has that changed throughout the year? Like, is it
It
changing so
has.
quickly that it's changed within the year itself?
Yeah, I mean, that's a great question right there because home appreciation, it goes up every year historically. And, these markets that were in New England appreciate extremely quickly. However, what I've seen is, yes, properties are still appreciating. However, there's kind of been this false sense of value that people are starting to place on these assets where they're not moving as quickly at the prices that people are asking. And we are typically seeing below asking price or large seller credits to offset these numbers where properties that are priced right, they will sell. I mean, I had a listing last week. We got an offer in 2 days on the market. But then on the other side, we'll talk about the Sunny River market. Average days on market's over 60 days, close to 90
Yeah.
days almost. And that's just indicative of sellers not understanding, or maybe agents not pricing for today's market and today's interest rates, where they still
Yeah.
think we're in 2019 where we're making $100,000 of equity every single year. Where a $600,000 house is not $800,000 today. It might be 650, right? So we're really starting to see people kind of trip a little bit, struggling to understand the market and the appreciation that's actually happening.
Yeah. Yeah. Down here in Massachusetts, appreciation is a funny word because there's different pockets of the year where
Mm,
demand is higher or lower. When we bought
absolutely.
this home, we bought this, we got under contract in October. In Massachusetts, for a primary residence, Q4 is the worst time to sell. It is the best time
Right.
to buy. And specifically because of that, we bought this home, we did not sell our other home.
Smart.
And I'll get into that in a little more, right? So in Massachusetts, the time for primary residence, at least if you're east of Worcester, um, so more towards like the Boston area, pretty good dense suburban towns. Uh Q1, end of Q1, early Q2, pretty much March and the first 2 weeks of April is usually when things are the absolute hottest, assuming that you get a really nice weekend and can have an open house. Now, if you want your home to get under contract that day, which is totally possible still, everything has to be nice and updated and done well, right? If there's a lot to be left desired in the home, it can work if the home is usually priced right in the 1.2 to like 1.5 million range. So long as it's not overbearing and too much and you have the right buyer. The house we're going to be selling, 3-bed, 1-bath ranch, we're leaving no stone unturned. There's going to be nothing
Mm,
left to be desired at that home. And I'm pretty confident that we'll end up selling it right in that 625, 650 range. And we owe 250 on it. It's going to be a really great transaction and a great home for somebody. And I don't think it's going to sit very long. But if I were to have listed that home this last September, same thing. Houses can just sit there. Even if it was listed at 550, houses can sit there for 30, 60 days, and then everyone thinks something's wrong with it. So,
mm,
playing the time of year is really important. And here's the other interesting part. So now let's go to Cape Cod, right? Where a whole bunch of short-term rentals there. Some people rent them out, some people don't rent them out, they just use them. In the right neighborhood, a house will not sit more than 24 hours. There's
mm,
certain pockets of Cape Cod where you can walk to a beach without crossing a major street or anything like that. The home doesn't have to be updated, but if it's priced appropriately, it'll be gone. It'll be gone the day they have an open house. So it's really fascinating. So there is still a nuance down there, but it's really, really interesting. Location is everything. But here in Massachusetts, things are a lot more dense, right, than what you have in Maine. And the thing that's also interesting in Maine is These days, you can buy a new build for the same price as an existing structure. And
Right.
so I'm seeing a lot more people go for the new builds that are in that like 800 to maybe 1 million, depending on, if you have views and how many bedrooms, stuff like that. Those seem to be going pretty well. And there's not an abundance of them up in Maine. I mean, maybe a couple dozen a year. Not,
Yeah, 10, 11, maybe 12 max, and then not all of
yeah.
them get sold to investors. So that's a great point. So you're pretty much saying you can time the market effectively in
hmm
Massachusetts.
You absolutely can. And if you're patient
Very interesting.
and you work with a realtor that knows exactly what the market does, we'll have to have them on sometime. We have another real estate agent connection there, John. Uh,
Yeah.
John from the Barnstable area, who's been crushing it. Same exact thing. Like he'll tell you the same thing. So timing in the market is really, really important depending on what your goals are, without a doubt.
I love that. And then it also comes down to seller motivation, right? So we see a
Yeah.
lot of times where maybe people list in the summer in ski country and they're not super motivated. They're fine letting it sit. But like you said, you can time the market effectively anywhere if you know exactly, what you're doing and where
Yeah.
you are. And yeah, ski country is not hot in the summer. We've seen that totally flip from
Right.
COVID when it was a 12-month sale market. So kind of the last thing I guess I'll touch on, a couple things. This year was the year to have the right lending team. I saw more transactions get messed up by random lenders we haven't heard of than any other year.
Yeah.
Closings getting delayed multiple times, or not using the right title company. So I think it's more important than ever to have the right team, a cohesive unit working
Yeah.
all together. Maybe this person's rate is a quarter point higher, but they can actually get you to close on time. That's pretty darn important. And then it's really, this was the year of rolling with the punches. I saw more, odd issues than I ever have. Things that make no sense of, the power company not hooking power up to houses,
Right.
or, random flooding issue. I mean, just bizarre issues. It was like there was something in the moon was out, or something odd, but this was the year of rolling with the punches and just sucking it up and dealing with it to get into the deal, because
Yeah.
prices and interest rates were still high. So the people that were transacting in this market, you had to be in it to win it and be pretty darn motivated. So that's what I'll say.
Yeah.
Tough year, a lot of success, but be interesting to see what comes next year. My economic forecast is I don't think a lot will change. I think we'll see a little bit more inventory, people that were sitting on the sidelines, but it doesn't appear that interest rates are going to come down at all. So it'll be pretty interesting to see what happens.
Yeah. Well, and honestly, I think equity is king, right? One way that you
Bingo.
can be a safer bet for a lender, right, is if you have more equity, right? So
Mm,
one thing that's really interesting, when we bought this house, I'll give quick rundown of the numbers, but I think it'll be helpful for people to hear.
yeah.
First, we used Skylar Welch with Main Point Lending. And we had to do some really cool, I'll say fun stuff to piece this one together, because we do have several other properties just under my wife's name, who still has a W-2 job. So a little bit easier to get lending than me, who, like, I work really hard to paint the right financial picture with a tax strategist and all sorts of things, but it's not always the best for
Right.
lending, right? So, but anyway, so we put 10% down on this home. This is a primary home, but it'll be helpful for people to hear this. We put 10% down. We were given with the home 900,000. It was 900,000. We put 10% down. Kim and I both have near 800 score credit scores, but we still got
Mm,
7.5% interest rate, which sounds high. But part of it also was we own multiple homes. We're putting 10% down. Now, this house appraised as is at 975, almost 10% higher than what we bought it for. So we off the bat, we have pretty much 20% equity in the home. Great.
perfect.
Uh, that will help us when we go to refinance to get a lower rate. Then we've made a whole bunch of updates to this house, right? So essentially what our strategy here is, uh once we finalize all the remaining updates, finish the kitchen, finish two of the bathrooms, everything else is brand new in this home. Floors, walls, one of the bathrooms, whole bunch of stuff.
It's a live in
We're
BRRRR pretty much.
It was. We did live in BRRRR.
Yeah.
We are going to get the home reappraised. I think it'll appraise right around 1-1, maybe a little bit higher. And then we'll do a refinance. We'll just do a rates and terms refinance. And all holds equal, I think we'll probably land right around 6.5% interest rate, because
Yeah.
we're also going to be offloading a house. So that won't affect the debt to income ratio as much anymore, because we're going to sell the house that we're renovating right now, our old home. So we sort of had this full big strategy in place of like, okay,
Mm.
we want to buy the home. Here's our other goals. And now our end game goal, once we have this house, like, once all the updates are made, is let's try and knock a point off. And at the end of the day, that'll save me probably $700-800 a month in my mortgage payment. So it's a bigger strategy of getting there, but we'll also knock off PMI at that point too. So I always tell people, like, look at the big picture, right? Yes, I could have shopped around lenders and gotten different interest rate. Um, I needed a lender that was going to work with me given our unique situation, and knew what our end game was for refinancing within a year of buying the home. So, um, yeah, people like you and me, we've worked with a lot of lenders. We see what works, we see what doesn't work, and for those that are buying, it's good to take the advice of folks that have either used those lenders themselves or have worked with them a lot.
Yeah, if it seems too good to be true, it probably is. There's two
Yeah.
lenders that I'd say can deliver, and yeah, Skylar's at the top of the list, and then on the more STR side, we've seen a lot with Brian Buckle, Alliant Credit Unions. So
Yeah.
been
Yeah.
pleased with him, but yeah, Skylar and her team, they crush it. And then people also, they've got to realize, when you're putting 10% down, your interest rate's going to be higher. Typically, it's more risk to
Yes.
the bank.
Right.
So the other thing that I see is people, they see these rates on social media. This was huge this year. People seeing these 6.25% rates, and they don't realize it's with 25% down in perfect credit and things like that. So I love the point of, get your long-term strategy in order. This isn't just
Yeah.
one acquisition, right?
No. No. At the end of the day, we'll probably have 30% equity
It's
when
incredible.
all we ever put into the house, was 10%. And then of course there was updates and renovations and stuff. But yeah, think about like your end game, and the quickest way there might not be super immediate, but working with a realtor that understands your goals, and a lender and a team that can sort of break all this down for you and talk through it with you, can save you a lot of time and a headache. Because at the end of the day, if the deal doesn't close and you don't get the house, you didn't win.
I love it.
That's the long and
Yeah.
short of it.
That's the
Cool.
truth. I'll say the last little
Yeah.
part, and then we'll transition it to you because this is in your domain.
Yeah.
Is more people are starting to take into account the escrow process as a time to get the house ready and get it ready for management. So I'll say it starts with me on the sales side when we're 30 days out, but I saw a lot of people really struggle this year in getting it set up because they started the day they closed. And obviously, you shouldn't be making purchases
Yeah.
when you're under contract and things like that, but you should have your designer ready. You should have your team in place. You should have everything ready to go
Yeah.
because we've done a lot of successful launches together, Dave. And this is where we transition to your side of things. What we've seen this year is people that start the process when they're under contract with me, and then once they close, they're pretty much up and launched in a week, 2 weeks max.
Yeah.
So, with all that being said, why don't you take it from here and tell me kind of what's working and what's not, and what was the pace of this year?
Yeah. Well, and it's interesting. Some of this depends, once again, on what your goals are with buying the home.
Right.
So, for example, we have these clients in Newry that bought a home, and they did all the interior design themselves. They did all that
Yeah.
planning while the house was in escrow, but they did the design and the implementation of it themselves so they could rack up their 100 hours. They closed in
Yeah.
Q4. They racked up their 100 hours, and then they never needed to self-manage, which was really
Mm.
interesting and neat. They knew we would be it's generally a little bit slower in November and December, and so they handed it over for management right away, but they did start getting their ducks in a row and think about what they wanted in the house almost immediately. Other folks, it's a great time. Once you get that PNS sign, start interviewing interior designers. And, you and I work with a few designers, specifically in the New England area, that crush it at getting everything bought, purchased, delivered, and set up within 1 to 2 week time frame.
Mm.
There's a premium that you pay for that, but you and I saw it in all its glory when folks shopped around and tried to piece 8 different people together to accomplish the things that one person individually could do, and it led to a lot of stress for the homeowners that decide to play that game, and at the end of the day, they didn't save any money, and they actually went live much later than they had hoped to, which at the end of the day cost them more money. So, I think that a lot of people learned very quickly that once again, depending on what your goals are, if you can't be at the property doing things yourself, working with a really reliable one-stop shop interior designer can be hugely beneficial. And again, you can start that process right after you get right after that purchase and sale is signed. A lot of times they'll allow you to do just a small deposit and then finish the deposit upon closing. um, just some really important things to think about. Think smart, not just what is going to save me a couple grand here and there, because at the end of the day, every week that you're not live could cost you thousands.
especially during peak season, right? With a
Yeah.
$5,000 a month mortgage payment, right?
Yeah. 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 And some of them $8,000, $10,000 a month mortgage payment, right?
That's huge. So tell me kind of what the biggest win was this year you're seeing for your clients. Who's winning and then who's losing?
Oh,
Because
I
we were
love
talking
that.
before, and it's a
Yeah.
great prompt, and I think you really got me thinking a little differently this year.
Yeah. Well, and I'll tell you, one of the benefits of owning Launchpad Consulting, and for those who don't know, Launchpad Consulting, we do business consulting, but we do also specifically short-term rental consulting. We make all the connections for people, from their designer to their cleaner, hot tub people. We teach them about the importance of design. We teach them how to get set up and launched. We actually do all the setup for them, for the client, for the homeowner, and then we support them in the back end. But what was cool, I think we serviced over 30 people this year, 30
That's
homeowners,
awesome.
and it was so cool actually getting to see it. It just expands your vision on what, your peripherals on like what's actually happening in the market. And what I saw this year was really no surprise to me. What I saw this year, and I'll explain it in a moment, but things that I've been expecting for a really, really long time. That is being the first or one of the first in your market to have a chosen amenity or multiple chosen amenities can really set you apart and make you a lot of money really, really quickly. If you're sitting on the sidelines and waiting for 100 houses to have a barrel sauna or a movie theater or whatever it is, the amenity, whatever that amenity or amenities, whatever they are, if you're waiting to try and calculate an ROI on that, there is not going to be a return for it, right? If you're an early adopter of a new amenity, like we saw Dawn Dorn with her chalet in Bethel putting a swim spa in, guess
Crushed
what?
it.
There's now, I guarantee you, within a year, there's going to be other properties, but she's going to have such a head start on that, right? Not only that, she has the hot tub, a gorgeous barrel sauna. Think about the experience that you want to provide to your guests, right? These days, I think a sauna is table stakes. Like, put it in there. Put the darn thing in. It's going to help you make money for a mountain home. In Cape Cod, I'm going to throw a hot tub in at my house because the houses that have hot tubs are still getting bookings almost every weekend, even right now in the middle of the winter. It's really fascinating. So if you want to know how to double your income in a home in Cape Cod, here's the formula. Put a hot tub in and keep it open year round. And you'll match what your summer revenue was through the other months of the year by getting weekend bookings. So it's really neat. And most houses there don't have a hot tub. South Shore, same thing, right? But the houses on South Shore will only manage houses now that have a hot tub because we know it's going to help that house make a ton more money, like 3x the overall revenue. So it's a time where if you really want to be winning in the short-term rental game and it's a goal of yours, I would say, at least in New England, lots and lots and lots of markets are very investable. You just have to understand what are those things that can help your house stand out. My house is a 2-bedroom cottage. It is a year-round, full heat and everything, but a 2-bedroom cottage in Cape Cod. I'm about to I'm about to bring in my opinion, another $40,000 in revenue because I'm going to invest in a hot tub and I'm also going to add an outdoor sauna there because I
Killer.
want to attract people in the off season. I use it all summer. I'm not renting it out in the summer, but I want to attract people in the off season. And these are some of the levers that you pull to do it. And then you can use vendors like Mainly Tubs and get all this stuff financed anyways, and they'll service the products for you. So yeah, it's always going to track back to your goals, but I think, you don't have to do a ton of research. You just go on Airbnb and VRBO, look at the properties that are on the first page, see what they're offering, but then think, what are they not offering that you could add? I'll say it again for Sunday River, add a really, really nice swing set. You want to know how to get kids and families to stay there longer in the summer? Give kids an activity, and that's one of them.
So, as the markets kind of mature in New England, you
Yeah.
don't feel like there's this oversaturation problem, or everybody says Smoky Mountain effect, which, is what it is, right? There's no shade to the Smokies, but, kind of my opinion, and then I want to hear yours is every market in America is developing, right? So,
Yeah.
just because things are happening doesn't make it bad. Is that your take too?
I agree. Yeah. If we look at Sunday River in a magnifying glass, Sunday River has maybe 400 single family homes.
Right,
The Smokies, they build 4,000 a year.
right,
Maybe not quite that much,
right.
but like the Smokies do have, I
Huge.
think, something like 10 or 12,000. Now there's more to do in the Smokies. I will say that, right? It's a much more developed area, so it's all relative, but Cape Cod has over 17,000 rental homes and condos as well. So those are really mature markets. At the same time, if there's a demand for that area, then it's fine, right? Now what's really cool about Sunday River is they're expanding the demand. So what Sunday River is doing is they're upgrading, and they have been every single lift. They're building like crazy. They're putting in new restaurants. They're improving the Jordan Hotel. They're doing things to get people to the area, right? So that's your major investor right there. And over the years, things are going to continue to develop. Downtown Bethel is going to continue to develop. Woodstock is going to continue to develop. All these different areas that are right around Newry are going to continue to develop because people need to be there to support the growth of Sunday River. And over time, people that are buying now, I think are going to be really happy holding on to their house for half a decade to a decade, and they'll recognize the appreciation with it. But I have not seen a slowdown in guest demand for, at least for the Sunday River area, at least during winter and summer. The shoulder seasons I have seen a slowdown in demand, but it's still higher than it was pre-COVID. And really, to
Interesting.
be successful in those shoulder seasons, start learning about revenue management and
Mm.
managing, your pricing and all that sort of stuff. Again, if that's in alignment with your goals. But yeah, generally speaking, across New England, I'm not seeing saturation. I'm actually seeing stagnation. Like, I'm not seeing a
Mm.
ton of new properties coming online or anything like that. We just happen to be in a space. It's sort of like the red car effect. If I asked you how many
Bingo.
red cars you saw on the highway, you wouldn't know. But if I asked you to count the next day, you'd see them, and you know exactly how many red cars you saw. So a lot of us in the space that say, oh, it's kind of like the Smokies or something like that. It's like, no, we're out there looking for people that are killing it. And then once we see people killing it, we're like, oh crap, no, I gotta now I
I
gotta
love that
improve
right
my house
there.
or do that, you know.
The red car effect and then stagnation. I think that's the biggest thing. And then the word of the year seemed to have been revenue management or the
Yeah.
term.
Yeah. Yeah. Honestly, an understanding of what people are willing to pay to be on vacation. And I also think what kind of guests you want to attract the different times of the year. In the spring and fall, I'm attracting a very different guest profile than in the summer or the winter, right? In every market. I'm usually attracting much smaller crowds. I'm pricing to attract smaller crowds and to give it's like the shoulder seasons is when we're really working to rack up 5-star reviews, right? Because we're giving somebody an amazing vacation experience on a budget. That's when you might have 2 to 4 people renting a 4-bedroom chalet because they can, and it's better than it sitting empty. But it's again, it's understanding the different seasons and who is coming to vacation or use the home in the different seasons.
I love that. So in all, seemed like a pretty good year.
Totally. Totally. Um, what do you think's on tap for 2025? What do you think is gonna, just well, hitting with home sales first? What do you think is going to what do you think is gonna move the needle for home sellers and home buyers? And do you really think anything will change between next year and this year?
I don't think a lot will change, but I think what's going to happen is I've already seen it this year is the people that aren't in it and really liking what they're doing with these investment properties or short-term rentals or second up, they're going to sell them because they know they can probably get out. Uh, New England, strong equity location in the country. Maybe they should have made some better decisions up front. Maybe they should have hired a manager, but I think they're going to start to realize, hey, this maybe isn't for me. Time to reposition into a different asset class. And then I think it's really just going to be the same old. It's the people that are in it to win it. They're going to kill it. They're going to crush it. They're going to continue to do well. And buyers are getting a lot more savvy. They're not going to overpay. They're really going to make sure it's the right deal in the right location, the right property. And we should see a little bit more inventory, but should be another solid year in what we're doing.
Yeah. Yeah, I totally agree. I could see some short-term rentals being resold, people that did
Mm,
buy for tax purposes really
absolutely.
didn't put the honest effort into the home and at the same time can't seem to justify paying a manager. I could see some of those houses coming on and flipping over into new hands, but
Mm.
you know, I think overall, probably a lot more of what we saw in 2024 to continue in 2025. Um, on the rental side, I think the limits are going to continue to be pushed on amenities and on design and revenue management. Those 3 areas. And the other thing that I know we're pushing super hard in 2025 and I think nationally is going to be a much bigger conversation is short-term rental safety.
Bingo.
Short-term rental
Yeah.
safety. And yeah, I see that being a major, major focus and maybe even some standardization across the industry on what that means. Justin Ford with Breezeway has been pushing this hard for honestly for years, light being shed on it. But, we want to bring, as advocates in the short term rental space, we want to bring the same level of consistency and safety as you would find in a hotel. And the thing is, as you add more amenities and as you add more bells and whistles to these homes, you start to learn that the home is a fairly dangerous place. And at the same
Mm.
time, every single guest is 100% unfamiliar with how to use most of the things in the home. And, you know, people hacking together a house just so it can be rented, you know, like, that stuff's just not gonna cut it, and so what I really hope to see in 2025 is um, a big push towards standardization, safety, fire safety, electrical safety, water safety, all sorts of things like that in these short-term rentals so we can continue to provide good, awesome experiences for guests.
I love it. Yeah, I think you hit the nail on the head.
Boom. Awesome. Well, Will, what's one goal you have that you want to put out there for 2025? What's a sales goal or another something else you might have?
On the sales side, just want to keep the momentum up. I have a goal of always serving a minimum of one client per week. That's always the
Yeah,
benchmark. And then I want to keep the building going. So goal is at least
love it.
5 projects. We've got some really exciting stuff coming up in different markets too. So I think expansion is a big thing for me. So Old Orchard Beach, Bar Harbor, just got our eyes set on new ventures. So What about you, man? You've got a lot of irons in the fire.
I have a great team as well, which allows me to keep the irons in the fire. Yeah, for the management company, really, we're interested in doubling the size of the portfolio, not number of
Mm,
units, but the income of the portfolio, and have the team ready and able to service the clients. Mastery is an important word to me, right? Like, we are always looking to be the absolute best in class in the industry at everything we do, specifically the management side. So I'm really
love that.
pushing the limits with the team to continue to improve our guest experience, to improve our owner experience. Every little thing we can do to make this, as solid as of a company as possible. At Launchpad, we're really looking to take on 100 clients in 2025, and I'm confident that we can do it. I'm really, really excited about that. And then within Launchpad, we've started servicing business owners outside of real estate to really help them learn how to elevate to CEO, how to build the
Love that.
systems, how to build a team, how to step out of the day to day so they could start thinking more strategically and not get owned by the business that they're supposed to own. So we've started taking on clients like that at Launchpad Consulting. We've launched a mindset mentorship. So I've started working with some students one on one, specifically in the mindset space. And that kind of ties into the Elevate to CEO as well. And one business I've started looking at is maybe some like ancillary businesses for vendors. So scheduling,
Mm,
billing, accounts receivable, stuff that can really help a lot of our cleaning teams and our handymen and, our different vendors themselves get out of the weeds of their own business. And finally, looking to do some development in 2025. I have my eyes on this old gas station downtown that, like, I can't get out of my sights, and it's run down. It's the only thing that looks like crap in our town, and I want to buy it and transform it. So, yeah, putting that one out there for 2025, a passion project.
I love it. It'll be an action-packed 12 months.
It's gonna be fun, man. I can't wait. I can't wait. So, alrighty, my man. Well, with that, if somebody wants to buy or sell their home in 2025, how can they find you, mister?
Just reach out, go to my website, willvanwickler.com, book a call with me. We'll jump on, and we've got a couple calls scheduled for today. So people are ready to get going into the new year. And, once they purchase it, if they want management, consulting, if they run a business and need help with that, how do they reach you?
Just head on over to davemenapace.com. That's kind of your one-stop shop for everything. Go to
Mm,
davemenapace.com. You can find information on each of our businesses. You can link out to the business websites. You can even book a time on my calendar right from there, and we can chat for a half hour directly. Uh, and we're here for it. We want to help as many people as possible and deliver the very best service that we can as possible.
I love it. Well, good to see you as always, and we'll catch you
Boom.
next week.
I love it, my man. Take care.
And that's a wrap for this episode of Hassle Free RE. We hope you found today's tips and stories as inspiring and useful as I did. Remember, success in the short-term rental industry is all about learning, adapting, and staying one step ahead. If you enjoyed the show, please take a moment to leave us a review or comment on your favorite platform. Your feedback helps us improve and reach more listeners like you. Plus, we'd love to hear your thoughts and any topics you'd like us to cover in future episodes. Don't forget to subscribe so you never miss an episode. And follow us at HassleFreeRE on social media for more tips and updates. Thanks for tuning in. And until next time, keep it hassle-free.